I'm Taylor Comblouzier, a mining analyst here at Red Cloud Securities. We would like to extend our thanks to Will DeBoer-Delis for sponsoring this session. Our next presenter is Andrew Gubbels, who's the Senior Vice President of Corporate Development of Aris Gold Corp. Aris Gold operates the Marmato mine in Colombia, where a major expansion program is underway, as well as the Jubi project, which is an advanced stage gold project in the Abitibi Greenstone Belt of Ontario. Andrew, you'll have 15 minutes or so for the presentation, and then we'll have a Q&A session afterwards. Please take it away.
Great, thanks, Taylor. Okay, most of you probably know us by now, but to remind those on the line, we are led by an executive team and board that has a demonstrated track record of building globally relevant mining companies. That's what we plan to do again with Aris Gold. We've had success with Leia Gold Mining, Endeavour Mining, Gold Corp, Wheaton River Minerals, and Yamana Gold, to name a few. We at Aris are starting with an initial asset in Colombia, and that upon expansion will become a cornerstone asset within our portfolio. Our strategy is quite straightforward and very similar to the companies I mentioned earlier. We'll create value by adding scale and diversification, but also optimizing and advancing the assets within our portfolio, investing in exploration and actively managing those assets as we grow. Why do we choose to start in Colombia? Well, in Marmato, we found a great asset with a 30-year operating history, and importantly, an established social license, which is critical in Latin America in particular. We were able to round out the development funding with the private placement that we managed last year. We also saw immediate value could be added by modernizing the upper mine that's already producing. And we loved the fact that the lower mine was substantially advanced and largely construction ready. Lastly, Marmato has a large, high quality resource with approximately 6 million ounces of measured and indicated resources underpinning a mine that will produce over 175,000 ounces per year over a 13-year mine life. For those who aren't familiar with Marmato, the mine is made up of two distinct mining areas delineated by the style of mineralization. The existing upper mine, which is the producing mine, is characterized by a narrow vein mineralization where cut and fill methods are deployed. This is where we're currently undergoing a comprehensive performance optimization program to upgrade what's traditionally been an undercapitalized operation. We'll go into more detail on that later. The lower mine, in contrast, exhibits wide porphyry mineralization below 1,000 meters of elevation and suitable for long hole stoping methods. This will be the majority of the future output at Marmato following its construction. Before getting into the lower mine development in more detail, let me give you an update on the current upper mine operations, where we prioritize a number of initiatives to improve the performance of that operation. We've invested in plant upgrades and refurbishing the underground equipment, and also instituting preventative maintenance programs to improve plant capacity and milling rates. To address what's historically been excessive dilution at the mine, we've implemented 3D modeling, which will substantially improve grade control and result in improved throughput and production going forward. On the cost side, we've rationalized the workforce and instituted new cost management programs to better control purchasing and procurement. And finally, we're improving health and safety with training programs and also implementing upgrades to the tailings storage facility to meet Canada Dam Association guidelines. This is evident in the guidance that we've put forward in our results from yesterday for 2022. We do expect a step change in production and a decrease in costs from the upper mine through 2022 as we continue to implement and complete the optimization program at that upper mine. On the lower mine, we've also made great progress advancing the project towards construction, where we officially started in late 2021. Several optimization studies were completed following the appointment of Wood Group as our EPCM contractor with detailed engineering ongoing. We expect FEL3 design completed by mid this year. An amended environmental management plan, or a PMA, was submitted to Corporal Caldus, a regional regulator, in May, with the permitting team currently responding to requests for further information with the Corporal Caldus. Further, we do expect our development capex to remain roughly in line with the PFS estimate at this stage, after factoring in the decision to use a mining contractor instead of doing owner mining, including some other optimizations from discussions with Wood Group. We do plan to spend roughly $85 million in capital on the lower mine in 2022. With respect to timetable, having put the right people in place and having made a construction decision, we did kick off construction of that lower mine. We started with the upsized camp, construction of administrative areas, and the first ramp in late 2021 and through the first half of this year. The construction of the new plant for the lower mine and mine workings will begin in 2022 this year, following the completion of that FEL3 engineering and the Corporal Caldus PMA approval. Our target still remains to get first ore from the lower mine expansion by the fourth quarter of 2023 going into 2024. To give you an idea of how the capital will be spent on the lower mine expansion, the roughly $270 million of development capital will be allocated towards land acquisitions and mine development, which includes that new ramp and a decline to access the new workings, a new 4,000 ton per day carbon and pulp plant, new dry stack tailing facilities that will handle tailings from the consolidated operation, and that new project camp I mentioned. Marmato is supported by excellent infrastructure, having operated for such a long time in the area, with access to the Pan American Highway, the Cauca River, and connected to the national energy grid. These are the PFS highlights, and the PFS was from 2020. But we do see with these numbers, which are still roughly in line with where we're seeing our current estimates, but we do, upon development, we do see Marmato as having all the characteristics of what will be a core mine project in our portfolio moving forward. Has 8.5 million ounces of resources between M&I and inferred, with 6 million ounces in M&I. A 13-year mine life with upside potential following a reserve update we expect to complete this year. With the completion of that reserve update, we will look into an updated PFS or a feasibility study at that stage to update our assumptions on the mine. The optimized upper mine plus the new lower mine will exceed production of 200,000 ounces of gold per year, averaging 175,000 ounces over the life of mine with low all-in sustaining costs. So a very good project indeed to have in our portfolio. Our second asset is the Jubi Exploration project in Canada's Abitibi Greenstone Belt. It has a 2.3 million ounce pit-constrained resource that was estimated based on historic drilling. We completed a 10,000 meter program in late 2021, which confirmed the widths and grades of gold mineralization in the Golden Lake pit shell and also extension along strike. At this stage, we're currently evaluating future exploration at the project for 2022. And unique from other companies with major development projects, we do have a strong financial position with over $140 million of cash on the balance sheet and another $72 million of committed funds from Wheaton Precious Metals for a total of $214 million of cash available. And we do feel we're developing the lower mine from a position with strength. And this doesn't include future cash flows we expect from that upper mine that's currently producing. Our shareholders are very supportive of the strategy, with board and management owning approximately 8.5% of the company. Colombia remains our largest shareholder at 44.3% of the outstanding shares. And again, have committed to lock up their shareholding and agreed to vote in line with board and management without selling or buying more shares as long as they own over 20%. With respect to ESG and sustainability, it's important to note that we're building on a strong and healthy social license to operate in Colombia. And we hope to nurture and further enhance our local relationships as the company grows. We did publish an inaugural sustainability report, which I encourage you to review on our website, which demonstrates our commitment to transparency as well. Going forward, we did commit to a minimum US $25 an ounce social investment fund, which will grow as we commission the Lower Mine project. And we've also established formal health and safety, environmental and ethics risk management systems in order to track the key data and improve performance in the future. Finally, I'll just reiterate the quality and strength of our leadership team. With Neil Woodyer as the CEO, he did lead Leo Gold Mining and Endeavour Mining previously. We have much of the same executive team that have been involved with those two companies in the past. You already know a number of the board members and our independent board of directors. Ian Telfer is our chairman, the former chair of Gold Corp. Peter Moroney, exec chair of Humana Gold, and David Garofalo, the former CEO of Gold Corp and Hudbay Minerals, also on the board amongst others. Frank Juicer is also supportive as a strategic advisor to our board of directors. Just want to highlight that we do see Aris Gold as a compelling value re-rating opportunity. Given the quality of the assets, the brownfield expansion, it's really a brownfield expansion of our producing mine. With a large resource, over 8.5 million ounces, including inferred, and led by a proven management team with a strong balance sheet as well. We do see that there's good potential for Aris Gold to re-rate just based on its meeting organic milestones for the development of Marmato. As compared to developers as well, we do trade at the bottom of the American-focused developer peer set. Again, with that substantial resource, size and quality of our resource, we are trading at a big discount to some of the peers. What this doesn't account for is the potential also uplift that we could see with future scale and diversification from our M&A growth strategy, which is really at its infancy at this stage. So I guess the question is why invest in Aris Gold? Well, we have a proven leadership team, as I mentioned, and we've made a personal commitment and investment in the company to be aligned with shareholders. We're starting with a strong first asset in the portfolio in Colombia, in Marmato, with plenty of exploration upside, not only in Colombia, but also in Canada. We also have a strong financial position with over $200 million of cash on the balance sheet, including cash available from committed sources. We also feel we've got unique access to cash to fund future growth in our M&A strategy. We do have a established social license to operate in Colombia, which is critical, and we do believe that we're well on our way to building another globally relevant gold company, starting with Marmato and Jubi. So I'll stop it there, Taylor, and open up the questions.
Perfect. So thank you for the great presentation, Andrew. So yeah, just a reminder to everybody on the line that we will take your questions. So please submit them using the Q&A button in the chat or in the event platform. So we do have a couple here already. First one, just wondering on the CapEx or how much CapEx is going to be spent this year on the Lower Mine development.
Yep, I mentioned earlier there's $85 million of CapEx allocated for capital spend in 2022 on the Lower Mine. Okay, and and with that, I guess the timeline for construction through 2022. I know in your financials that you put out yesterday, you mentioned and in the presentation the construction started last quarter, and right now you're currently procuring long lead items. What other work is kind of underway right now, and kind of what are we looking at this year? Yeah, so within the timeline, almost everything is within our control. The one area that obviously we don't fully control is the amendment of our environmental management plan, which is with the local authority, Corporal Caldis. We are responding to feedback from them. That's really provides our view on the impact of the lower mine expansion. And we do hopefully receive that in due course. What we can do before receiving that permit, we have started on a number of those initiatives, and that is we started construction of the new camp, which will service both the upper mine and lower mine. We have done some work on administrative areas, and we have started developing one of the two ramps, and the first one will provide access to really the transition zone between the upper mine and lower mine. That will provide access, but also to the upper mine, but also ventilation for the lower mine. So most of the work that we've done on capital items have been more, you can call it shared infrastructure between the two. We do still expect to spend that $85 million on capital this year. Some will be in the long lead time items that we order. So we do expect to receive that Corporal Caldis approval of our environmental management plan this year, such that we can start construction of the plant and the workings for the lower mine project in the back half of this year, likely.
Great. Okay. I have a question here wondering about if you are planning to increase your presence in Eastern Canada.
I mean, we don't rule out anything in the Americas. We're opportunistic with respect to M&A. We do feel we've got a fairly unique position in Latin America with our first asset in Marmato and the construction of our board and relationships with our board, etc. Canada, given that we do have the footprint, means that there is some potential for synergy and industrial logic in that area, and we will certainly consider opportunities as they come up in Canada. It does happen to be a little more competitive place for M&A in terms of buyers, but we do evaluate opportunities all through the Americas.
Okay, great. And kind of on the same theme, just wondering about potential for future M&A, and are you focused internally or right now with the kind of development going on at Marmato, or is it just a kind of a parallel keeping an eye on potential opportunities out there all the time?
Yeah, no, it's a good question. I mean, we did build the company with the strategy of growing and diversifying. I mean, we would love to be proactive and opportunistic, and we do know that is part of our mandate, but we also want to be disciplined in what we do and ensure that we're adding good assets that we can optimize and add value to, as well as assets that would fit in well with what we already have in the portfolio. So we have been evaluating a number of opportunities. At the same time, we did want to take the time to really understand what was required at Marmato, especially in the back half of last year. And I think we've got through a lot of that process, meaning that it does free up a little more time and bandwidth to really focus on the M&A work stream. So it is still very much part of the plan and even prioritize even higher through this year. So we do expect to see some M&A activity in 2022, certainly.
Great. Okay. We do have just under a minute here. Just wanted to kind of get an update on the drilling front. I know you put out results for Jubi at the end of last year, and then at Marmato, there was a large drill program last year, continued into last year. Kind of just what's the status of everything right now?
Yeah, so we've completed our drilling at Marmato. We will come out with an updated reserve. And future drilling probably will happen maybe in future years, 2023 going forward. But we do feel we've got a good base and a good resource and an updated reserve that will underpin the mine plan going forward. So we're well set with Marmato. And with Jubi, we are assessing the next step there. So we will come up with a view and a plan sometime early this year on what we do next at Jubi.